Good morning, traders. This is Berlin speaking, Germany. Jens is my name. I'm just the introducer. It's Monday. Let's start into new trading week. It's Monday, 30th of October 2017. Welcome to our new webinar series, Real-Time Daily Trading Ideas, 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 15 to 20 minutes is our goal. We can answer 1 or 2 questions of your questions you directly do in this webinar. But before we start, of course, let's start with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. Before you start with live trading, please start with a demo account and make you familiar with all the risks what are involved. If you'd like to see the full risk disclaimer, just visit one of our web pages like admiralmarketsglobal.com or admiralmarkets.com and you will see the full risk disclaimer also there. This is me. My name is Jens. I'm speaking from Berlin office of Admiral Markets. My English is made in Germany, but hopefully some of my quality is made in Germany too. But again, I'm not the main speaker. The main speaker today on a Monday, it's Jay. This is our scheme. Mondays, it's Jay's day. Tuesday, it's Paul's day. Wednesday, it's Mike's day. Thursday, it's Nenad's day. And usually Friday, it's Dirk's day. 5 days a week, 5 different traders. Everybody is unique. Everybody has their own trading style. If you like the trading style of the trader today, join us next Monday again. And if you like to see other styles, just visit us to the other days. Every day to the same time, Admiral Markets will be available. Of course, we are also available if you like to trade Forex and CFDs with us. Many benefits, which you are only getting in this way at us, at Admiral Markets. For example, MetaTrader 4 and MetaTrader 5 is available with us, but not the basic platform. It will be tuned with many add-ons. We call it MetaTrader Supreme, and maybe some of our great free add-ons we will show also in our live webinar. And of course, last but not least, the spreads. One of our bestsellers is the DAX 30 CFD, typically fixed spread to the main trading hours is just 0.8 without any commissions. Check out all the benefits also at admiralmarkets.com if you like. And also some information about our regulation. Admiral Markets UK Ltd is of course authorized and regulated by the Financial Conduct Authority from London. And if you'd like to contact us by phone, by email, via YouTube and Facebook, just some of our channels which are available, just come to us, or again, admiralmarkets.com. That should be the starter, the anchor, and you will find everything about there about us. Yeah, and now let's come to Jay Medrow. This is a day trader of the day. It's Monday. So hi, good morning, Jay. Now it's your turn.
Good morning to you. Good morning, traders. I hope everybody is feeling all right. Let me get set up in terms of my screen here. It's a busy week ahead of us, very busy. So hopefully we'll have some volatility, and that's going to enable us to make some money. So this is a picture of me, and let's get started. Last week, morning meeting, regular morning meeting. Let's prepare for the week. So last week we talked about the Bank of Canada, and the outcome from last week was that the Bank of Canada is indeed data dependent, and the market expectation for the next rate hike moved back from January 2018 to March of 2018. And the result we will see in a little bit is a weaker Canadian dollar, especially early on in the week. Then the major event of last week was the ECB policy statement announcement, where the ECB did exactly what we expected, the market. They reduced from 60 billion down to 30 billion per month their asset purchasing program in terms of nominal size, but they also extended it from January 18 for another 9 months until September 18. So it's exactly what was said there. And this is important, the COT dealers, the CFTC Commitment of Trader report showed us that the dealers were short. So what had actually happened is that the euro strengthened into the meeting. It actually went strong into the meeting. And then, and this was unforeseen, the ECB did this. And I'm just spending a minute on this so that most of you guys can understand it. They gave additional information on asset purchase program. And the key part is that the message was really dovish. It said that the euro system anticipates that the purchase volumes under the 3 private sector purchase programs will remain sizable. So on the one hand, they said we're going to reduce, and on the other hand, they said all of the money that's coming due by all of the bonds that we purchased, as well as the coupons, we are going to reinvest. So they're doing what the Fed has been doing, And the difference is that the Federal Reserve is coming off of this reinvestment program by around 11 billion per month right now, and the ECB will now continue going forward to show us how much they're going to reinvest. This was new information, and in effect it actually means, yes, on the front end we're reducing the purchases, but on the back end we will continue our stimulus for a long time. And Draghi was very strict on that. He said rates will remain lower for as long as it takes, well beyond the asset purchase program. So he made a disconnect between the two. That was a very dovish message. And if you look into your charts, you will see, for example, Eurodollar was almost a straight line. In fact, let's look at it together. Very rare that we see this, but the longs got heavily squeezed out of the market. And this is actually called a long squeeze. Yeah, the market is just getting hammered. And down here, we have what's called stopping volume. And the market stops on this extremely high volume. Let's see if I can get this candle done. Yeah, it stops the downward progress. And there's a Sunday candle, it opens up, and now we're seeing short covering here. These are aggressive market buys. And we are currently, in terms of market profile, at a volume point of control. So we see this little congestion area here on Friday, and the market will have to find its footing. Overall, we remain bearish on the euro for now. So let's continue on. We had a trade last week, long dollar versus yen, and we see the lines we drew in at the beginning of the week, right? So we were somewhere around here, so we didn't see this. So we took a startup position long, and as you can see, the target was never reached. Instead, this long uptrend just ended in a consolidation. The market came exactly to where we expected it to test, and then it moved up higher, but beyond 114.40, it was not to be. There was too much selling pressure there, and we also saw a lot of option volume in terms of open interest stopping the progress here. What was the problem? The problem was, as we can see in, I think, one of the next pictures, that the dollar and the yen strengthened at the same time. And I'll give you a clue as to why that happened in a second. Now, Tuesday to Wednesday, we took a different trade, and we can see that we took a startup position here right at the beginning of when we took a look at the market, and we exited the next day at our target. Now, this was only half a position. The expectation was to add the second half of the position on the square up. And here's something that I want to let you guys know. We're doing this on a Monday to prep you for the week. The days that I personally trade are Tuesday, Wednesday, and Thursday. Monday is what we call the construction day, where the big boys get in position, depending on what the analysts are telling us, what may drive the market during that coming week in terms of fundamentals and or sentiment. And Fridays is square up day. That means we're squaring the books and we're taking our profits. And this is exactly what I did on the dollar yen. In my own personal book, I took what's called a scratch trade, plus minus zero. Now on the demo account for Admiral Markets, I keep the trade open because I'm looking to add to the long dollar yen at a lower level. Okay, this is a strength versus weakness indicator that I had programmed, some Russian programmer for my MT4. And as you can see here, it shows us the relative strength above the zero line versus the relative value below the zero line of each individual currency depicted in a color. So we see that the last 30 days, the US dollar has really been strong and the New Zealand dollar has really been weak. And over the last trading week, this is why I took the screenshot on Sunday night, so that's not going to change. I wanted to show this to you. We see the US dollar and the yen appreciate at the same time. And this is important because this is contra and counter to what I expected on Monday. What we can see here is that the Aussie dollar, the New Zealand dollar, and the Canadian dollar all weakened versus the yen. And here's a question for the more advanced trader amongst us. What does this mean if these, especially Aussie dollar, New Zealand dollar, drop and the yen strengthens? Does anyone here in the group already know what that means? No, Peter, this is just relative price development. One currency, yen in this example, versus the real-time price, tick by tick, versus all other 7, to answer your question. Risk off. Dees, hey Dees, I remember you from last Wednesday. Good to see you, bro. No, it actually doesn't mean risk off. Good thinking though, because this is the regular teaching where we say if the yen and the Swiss franc, for example, appreciate in value, we often see risk off flows. But in this case, it was not risk off. In this case, it means that the so-called carry trade is being unwound. So the carry trade is if I sell Japanese yen, which costs me nothing in terms of overnight swap, and invest my money in the Aussie dollar, which gets me 1.5% yield, or the New Zealand dollar, which gets me 1.75% yield, I am making the so-called positive carry. So I'm shorting the yen, costs me nothing, and I'm making 1.5 or 1.75% annually per day. So it's actually really calculated. Let's say you do it by 10 million, this carry trade, 10 million Aussie dollar long versus 10 million yen short, and you hold this for 5 days. So you get 1.5% times 5 days divided by 365 days times the nominal size of your trade. And this is an unwind that we're seeing of the carry trade. And this is something that I didn't catch on Monday when I was talking to you guys, because I had just come back from Asia and was still really tired. And it materialized, especially Tuesday, Wednesday, Thursday, and into Friday. And that was very unfortunate for our dollar-yen trade. And if you remember, if we go back to the dollar-yen slide, that's the reason why that pair went sideways. I always want you to trade strength versus weakness. Yeah. So a much better trade would have been New Zealand dollar versus US dollar short, which we did and we took profits on, or Canadian dollar. Anything that you see here, New Zealand dollar, Canadian dollar, Aussie dollar, short that versus US dollar or yen, or even the British pound. Okay. I hope that makes sense. Okay, and then on the last hours, we saw some, and that's typical for the square up session at the end on the Friday. We saw that what was strong coming off a little bit, like the US dollar and the pound, you can see, and the euro got annihilated. I mean, it just got creamed. The longs were squeezed out of the market, as I said, a long squeeze. Okay, this is the picture from this morning. So we're seeing that the British pound is strengthening, and we still see that the New Zealand dollar in the overnight Asian session, which was quite mixed and low volatility due to a lack of tier 1 data. Tier 1 data means fundamental data. There was no new catalyst to move any of the pairs significantly, okay? Then this is what the week is looking like for us. So we have the Bank of Japan rate decision. It's expected to be a snooze fest. We have the Canadian dollar, where we see GDP. We see Governor Polo's testimony before the House of Commons Standing Committee on Finance. We have the Consumer Board consumer confidence in the US, not that important, and we have Kiwi employment change quarter on quarter and unemployment rate. It's not currently expected to sway the Central Bank of New Zealand, but the new government wants to, as we alluded to last week, expand the mandate of the RBNZ. And they want to include employment as a target next to the inflation target that the bank is currently pursuing. That's interesting. So we'll have a closer look at the employment number here, but we don't expect as massive movement. On Wednesday, we have in the GBP, we have manufacturing PMI. That's quite important for us because within the European sentiment indicators, we see that UK was really underperforming, and last month Austria was really outperforming. So we were looking to long Austrian service companies in terms of equities now versus shorting UK construction companies. On the dollar, we have ADP, which has in the past been a pretty good indicator for non-farm, and that correlation broke down. So one or two of you, whoever is a good Excel user, you can dump the ADP data into your Excel, and you can dump the NFP data into your Excel and have Excel calculate a quick correlation matrix and see, you can see with your own eyes and prove to yourself that the correlation has broken down recently. Then we have ISM manufacturing PMI, and that's expected to bounce back after the hurricanes. I'm pretty sure most of you guys saw the superb announcement in terms of earnings from Amazon, Microsoft, Caterpillar, some of the heavyweights last week. So the hurricanes really only made a tiny little dent locally in terms of Florida and Texas, but overall the earnings in the US are very, very strong, and economic trade, global economic trade, is also expected to grow by 3.9 to 4.2% this year. All of that, given a low global inflation environment, means long equities. And have your pick. Buy European equities, buy US equities, buy Japanese equities. Japan Nikkei is at a 21-year high. So everything is Goldilocks, as we call it. It's going pretty well. Crude oil inventories, FOMC statement, that's all on Wednesday. Also for you guys to note, in the past, Yennett and company have preferred to give policy changes via the press conference. Now, Wednesday's FOMC statement is only in writing. There's no press conference, so we don't really expect a major change. If we look at the federal funds rate, we have a over 90% probability that the next rate hike by the Fed will take place in December. What's important here is that this week we are supposed to be hearing who is going to replace Janet Yellen at the Fed. And again, if it's Mr. Taylor, whom you know of the Taylor rule, that economic model that he came up with, that's going to incur a strong dollar reaction and a strong US yield reaction in terms of rising yields, and i.e. a rising US dollar. If it's Powell, who is more dovish and more data dependent and follows more in the path of Yellen, who is more liked by the Democrats, if it's going to be Powell, then we are going to see a more dovish reaction in the market, i.e. rates are going to come off. That means yields are going to go lower, and the US dollar is expected to follow a little bit lower. Then we have the Bank of Canada. As seen, it's data dependent and more cautious tone lately, so our ears will be listening to what Polos has to say. Thursday, Aussie dollar, we are missing a cyclical upswing. We're still not seeing it. Seasonally, we're expecting it right now, but we're not seeing it. So we'll keep an eye on trade balance. And Australia really is just very, very dependent on the Chinese data and economic growth. So as long as Chinese PMIs are coming in strong, we expect Aussie dollar to pick up as well. So keep an eye on the trade balance. And then we have Super Thursday. Bank of England is now likely to hike the first time in 10 years. Why? Because their inflation is running away from them. It's really, really quite a headache. Now the market is expecting a dovish hike. I don't expect that because the Bank of England is trying to fight a very weak currency, and it needs to appreciate the currency. So you can probably gauge it already. I'm trying to look along the pound this week, okay? We have the inflation report, and then we have the press conference. In the US, we have the unemployment claims. Last time I'm talking about NFP, sorry. Let's look at the claims real quick on Thursday. Where are the claims? Unemployment claims expected to come in line, so nothing major there. Friday, dollar average hourly earnings is expected to come in weaker, and employment change, NFP, and non-manufacturing PMI, very, very important. Two things I wanted to show you real quick here so you guys can learn. Monday, 1:30 our time, PM, core PCE. This is the core measure by the Fed to look for their inflation. Okay, they love this. They love looking at core PCE. It's expected to come in line, but they also look at the five-year forward inflation expectation swap. You can find that on the FRED database, F-R-E-D. Just Google FRED database and look at that one. And on the NFP, I wanted to show you this. Last time, due to the hurricanes, we had a contraction of 33,000 jobs, and it's expected that 311,000 are going to come in. So running above average. If that comes in, put that on top of the quite good GDP growth data of last week, we'll expect a bounce later in the week in terms of the US dollar. Now, every weekend, what we do is we take a look at the CFTC commitment of trader positioning, and we take a look at volatility. Now let's run through it real quick because we're already into 19 minutes into our meeting. Aussie dollar, dealers are short, but they're reducing their short. Pound, no clear signal. Canadian dollar, dealers are short, slightly turning. By the way, guys, this is data from Tuesday, reported last week Friday. And you've had plenty of time to follow the dealers in that short in the Aussie dollar and the Canadian dollar. Euro, dealers are short. And we continue to see weakness or expect to see weakness in the euro. Yen, dealers are long and getting longer. That's quite interesting. So I'm not looking to short the yen at all this week, as I don't know if the unwind of the carry trades are going to continue. Kiwi, dealers crossing into long, but no extreme positioning yet, so not that relevant. And Swiss franc, dealers crossing into long, same thing, not extreme, not relevant. And on the dollar index, dealers are slightly long, but not extreme. We're looking for extreme readings. Now, quick look at volatility. Euro 7.42 is in the middle of its range, and the volatility collapsed right after the ECB. If you look at that, the options dealer priced into a volatile ECB, 7.92, then it collapsed down to 6.87. Volatility bounced back a little bit into the middle of its range. So if you're looking to trade the euro, look at your ADRs and ATRs and use volatility-based stops is my advice. Pound 8.38, volatility spike on Friday, and then it collapsed into the weekend as expected. Yen, same thing, 8.78. It spiked on Friday, and then it collapsed into the weekend. And on the VIX, we're at 10.25. This is the volatility of the S&P 500. We're going to watch it because on Thursday we have Apple's earnings, and Apple already told us that the orders for the new iPhone 10 are off the charts. So I expect another very good earnings announcement from Apple. So have a look, and if you can, if your platform shows you implied volatilities for Apple stocks, look at the money implied volatilities to creep up into Thursday and then collapse after the earnings meeting. For today, there's no tier 1 data, but I wanted to show you real quick what we have in terms of option volume outstanding that may be of note. And in euro dollar, we have 115.80. We have 810 million outstanding. And what we do, I don't know if I mentioned it last week, is these expire at 1400 GMT in New York, is that we draw in this level. And if the market price is not too far away from this level, these levels can act as a magnet. And just have a look at it over several weeks and get used to it and see if you can see a good price action volume supported buy or sell signal once your pair hits into one of these levels. Dollar yen 112, 780 million outstanding. And potential trades this week. Let's look at the currencies. Pound looking for strength due to rate hike and the Bank of England needing to fight negative inflation due to its weak currency. Sorry for the typo there. Dollar, again, if Powell is nominated, dovish reaction expected. If Taylor is nominated, hawkish reaction is expected. I continue to expect Powell, but I don't have a crystal ball. Euro, continued weakness possible from the very dovish ECB last week, and some of the big boys still on the buy side need to adjust their positioning. Canadian dollar, continued weakness from data-dependent BOC, but WTI is recovering nicely. So there's still a very high correlation between the Canadian dollar and oil. So if oil, due to Saudi Arabia said late last week that they also support a extension of the production cuts, and that caused WTI to close firmly above 52. Let's have a quick look where we are in terms of crude right now. 53.81 is WTI. So I don't necessarily want to short the Canadian dollar if oil is recovering. What else do I have? Aussie dollar, seasonal upturn in the economy is missing, but I don't have a very significant tier 1 data event. I have retail sales on Friday, which is expected to come better than expected. Let me show you this real quick. Yeah. So the Australian consumer expected to be better. And we have trade balance that's also expected to come in at 1.2. So not that good in terms of catalyst to short the Aussie dollar. New Zealand, continued weakness from change in RBNZ mandate. That has to be watched, especially given the employment numbers. We talked about that. So what does that leave me? We have month end today and tomorrow, right? Let me double check. Yeah. So month end, what happens is that the UK is still a member of the EU, and every member country needs to pay a membership fee at the end of the month. So what we often see towards the end of the month is that the EU, Great Britain is selling pound in order to buy euros to pay for the membership fee. So this is going to continue until at least March 2019, when the Brexit may or may not materialize. By the way, my money is still on it not going to materialize, but we'll have to see. So this would be a great opportunity to get into a short euro pound at a super opportune level Tuesday afternoon or Wednesday morning. So let's take a look together at that trade if you guys want to. So we have, here we go, we have not euro dollar, sorry, we need euro pound to finish up the morning meeting. Here we go, euro pound. So if we go from a weekly level, where are we? We're going to put in the last swings, like I showed you guys last time. Where are we above and below? Where are the fractals? And you can put those in MT4 very easily, Bill Williams fractals, and it shows you the last swing high and the last swing low. In terms of the daily, how can I adjust my fractals then? I can move this one up a little bit, and I can move this one down a little bit. Perfect. Then let's look at the 4-hour. Preferred time frame for me to look for swing trades. We'll see that the market turned around above 90. It tested this one more time and was rejected there as well. And below here we have 87.50 area. And remember, these are all zones, right? We're always looking for zones. So we're coming off, we're trading in what we call a box with an upper edge and a lower edge. So if we want to put in these edges, we can draw them in. So there's an upper edge up here that we're going to keep an eye on. And it's questionable if we have liquidity above here or not. Liquidity means stop orders. And what the big boys need to get in and out of positions is liquidity. And then we have a level down here that is currently what's called our bottom edge. So upper edge, bottom edge, and somewhere in the middle, we have a weekly pivot, we have a daily pivot. And if we were to put on a volume profile on the end, we'll probably see that somewhere here is the highest volume, right? So I want the market to trade back up into this point of control and then come off again. So let's look at it on a 1-hour chart. And what I did for us is I put on some fibs, and we're seeing that the market is consolidating. Month-end flows, I expect this pair to come up, rise, and I would put a starter position at this volume point of control here at around 88.61. And I'm looking to potentially test this high at around 89, the figure, one more time. And then I'm looking for the market to come off. And I would play it dynamically, okay? Let's start with 0.5% here and another 0.5% here. Or if you're more conservative, because you have a lot of POCs above you, you could do 1/3 of your position here, another third of your position here, and then the final third of your position in here with the expectation of the pair dropping later on, okay? There's a monthly pivot around the 89.30 area here as well. Can you see that? 89.28. So, and a square up that hasn't taken place yet. So let me take this guy and put him up a little bit higher. Come on. Here, there is a square up. Do you see this? It's not quite half of the candle was touched. And it's an interesting, again, in terms of market symmetry at a fib level. So this would be the ideal short is right up there. But I know a lot of us are impatient, and it pays to be patient in the market. So if you want to start getting in early, do it somewhere around this 50.61.8 retracement zone. And the guys who are trained by me and know in terms of price action and volume what they're looking for to have a confirmed entry. These are entry techniques, but you guys know a lot of entry and exit techniques yourself. Just make sure you don't have to be spot on in terms of your to the tick in terms of your entry. Allow yourself to work in zones just like the big boys are doing. It makes your trading a lot easier. And then next week we will see what comes of it. Guys, 29 minutes. I'm sorry But Jens is coming in. He's probably going to reprimand me. I'm sorry, Jens. But I hope it was value.
It was really great and fantastic and amazing. But yeah, the time is our limit. Some people ask about the great indicator, what you showed. Maybe next week we can speak more about it, just because in high speed I can show you what is already available right now with Admiral Markets, the correlation matrix. It's not 100% the same, but also not that bad. Try it out. It's directly with MT4 Supreme and MT5 Supreme with our MetaTrader 4 and MetaTrader 5 available, and next week more about that. Thanks and have a good start to the new trading week at all. And yeah, greetings. And if you like to watch this webinar again, a couple of hours later in our YouTube channel, have fun. Greetings from Berlin. Bye-bye.
Bye-bye.